In this video, I'm going to go over two different things. One, the results of my market open day trading plan after taking 48 trades. And secondly, I'm going to show you an example plan that you could start trading immediately with very little money. I'll show you exactly how much money and very little risk. So if this suits your risk profile, you could start trading like this right away and start collecting valuable data. So let's get into the spreadsheet really quick here so you can see when I started this day trading strategy. This test was on June 17th, 2021, and today is the 26th. I didn't take any trades today. I wasn't around to trade the open. I was looking for trades on Thursday and Friday. There was nothing for me to take. So let's just take a look at that date range, June 17th to July 23rd, and we can take a look at the P&L so far. June 17th, July 23rd. It looks like we're green, but actually what this is mostly the result of my swing trade with SPXL. The whole point of this test trading strategy was not to make money, but to prove whether or not it's profitable based off the win rate. And I'll go over all of those details. But you could see right here, even though the day trading itself is not profitable because obviously it's less than the swing trade, it's only cost us a tiny little bit of money. I actually have the exact amount on the spreadsheet. Since we've taken 48 trades, it's cost us $1.47 to take all these trades. And some of these stocks are as expensive as $70 per share. A lot of them are around $30 to $50, and we've only spent $1.50 taking all of these trades and getting very useful, valuable data. So that's pretty valuable in my book. So what is this plan? Well, it's trading all or nothing 2R. That means that one winner will cancel out two losers because one winner wins 2 times the risk and one loser loses 1 times the risk. What we haven't been doing in this, because this is just test trading, we have not been equalizing the risk on all the different trades, and that's what we're going to do once we prove this profitable. If you want to start doing that right off the bat, you can, and you're still going to be at low risk, and I'll show you exactly how in just a moment. But with this test trading, just because I wanted to make the risk as little as possible, what if our win rate ended up being 20% or 25%? I didn't want to be any more red P&L wise than we had to, so that's why I just took one single share on every single trade. And the only issue with that is then your risk is different on every single trade by a lot, and you're not going to show green P&L even if your win rate is green. So what does a green win rate mean, or a profitable win rate mean? Well, whenever you're trading all or nothing 2R, 33% or better, 33% is break even. Anything better than that is profitable. So it's really interesting to note, out of all of these trade days that I've taken so far, 4 break even days, 5 red days, some of them just barely red, like a 25% win rate day. You're not going to lose a lot of money because you're just under break even. So that one it's almost a break even day. And then if you look at my 100% win rate days, there's 7 100% win rate days, and then a handful of 50% win rate days, which means likely that I took 2 trades and I won 1 of them. And on a day like that, you're going to still be up 1 times your risk. So if you look at trade number 1 here, it looks like I'm not doing too well on the first trade. We're actually up 3 times the risk. Very easy to figure out. You can see one of the data parameters that I collect is if the stock went to 2R or it stopped me out at minus 1R. So that's what this column is. And when you simply add all of those together, you will know if you're profitable or not on that trade. And that when I add all those together, I end up with 3R, or 3 times my risk. Trade number 2 is even more profitable. Adding all of these up, we end up with 7 times our risk. So we're up 7R on that trade. Third trade, same thing. Adding up all of these 2R numbers, we're also up 7R on that trade. Now, there was a time in the beginning of this testing where I was taking trade 4, 5, 6. I was going to take up to 10 trades if I had the trigger to enter on that many trades. But I noticed that 4, 5, and 6 were all red after the first week. And since, we're trying to play it safe here, I just decided let's just stop after 3 trades. That way the maximum that we could be down is minus 3R, and it doesn't take that much to recover from those losses. So after all of that stuff, if we average up all these win rates, we're at 54% basically. Remember, break even is 33%, but that doesn't really give you a good picture of the whole story here. Out of 48 trades, this is our true win rate, including those 4, 5, and 6 trades and all the error trades and stuff like that. We have won 20 trades out of 48. So that means 20 winners and 28 losers. But remember that those 20 winners are worth 2 times the risk, where the 28 losers are only losing 1 times the risk. So that's obviously a very profitable win rate, 42%. And then if I remove the trades that were taken in error, that's trades that either don't meet my current plan criteria, so I've updated the plan as we work through this test trading and find out weaknesses in the plan, or maybe there was some type of a chart glitch or something like that that triggered me to take an entry. There's only been a few of those trades. You can see here basically 6 trades out of 48 that meet that criteria. When I remove those 6 trades, the win rate goes up to 47.6%. The average of those 2 win rates is 44.6. So that gives you a good idea of what my win rate might be down the road. And this number here has been getting closer and closer to that number. So that kind of proves that theory. And the win rate after just 3 trades is 46.5%. So that's if I removed those trades 4, 5, and 6. If I didn't take anything but 3 trades from the beginning, that's a very encouraging number. It shows me that the 3 trades is the way to go. The win rate on the first trade, it looks low, 38.1%, but as I showed, it is profitable. Remember that 33% is break even. So you can see with just 5% on top of the, 5% on top of the break even win rate, we're still up 3 times our risk after 48 trades. You extrapolate that out to 100 trades, we could be up 6 times the risk by the end of this thing. Win rate of the second trade, 50%. Win rate of the third trade, even better, 62.5%. This is a perfect example of why you want to take your stop losses if you get into a trade and it goes against you. Just take the stop loss, get back in on that second trade or third trade, and the chances of you winning that trade are much higher. So you could win back your losses. If you win the second trade, you'll be up 1R. If you win the third trade and you lost the first 2 trades, you'll be break even for the day. Much better than a red day. Of course, you can lose all 3 trades. That can happen sometimes. That's why we stop after 3 trades. So let's take a look down here. Results of test trades so far from all trades, including errors and trades that are now outside of the plan. Total trades 48, 2R winners 20, minus 1R losers 28. So when you put all that together here in this formula, you can see that we're up 12 times our risk so far. If I remove those trades 4, 5, and 6, we would be up 17R. So what does that mean? If we were risking $10 per trade right now, we would be up $120 or $170 if we only took 3 trades. If we were risking $100 per trade, we'd be up $1,200 or $1,700 per trade, so on and so forth. So it all depends. Of course, in the beginning, you're not going to be risking $100 per trade, but it just gives you an idea of the potential of this plan if it continues along this path. So let's take a look at the day trading plan, and then I will show you the example plan that I promised at the beginning that you could start trading immediately. This is my plan. This is the one that I use. There's a lot of information here. I want to go over all the new stuff that I added, and really that starts right here, picking stocks from the screener when there's multiple opportunities. So if it comes down to a stock with a lot of volume, especially compared to its average volume, I'll show you that on the screener in just a moment, that's gaining, so that means it's green, it's going up in price since the market opened, or a stock that's lower in volume but gaining even more, maybe it's up 20% where the other stock is only up 5%, I'm going to stick with the one that has more volume. Just because if the stock is already trending in one direction, in the upward direction, and there's more volume than usual that's coming into the stock, then it's more likely to continue in that direction than the stock, say, that is on the top gainers list but has very little volume compared to its average volume. That could attract a lot of people that have been holding the stock to come in, all of a sudden bringing in new volume, and then the stock can go down. Of course, the opposite can happen, but this is just me trying to place the odds in my favor. All right, so this is just a little reminder for myself because the win rate of 42% doesn't sound that encouraging, but when you consider that we're up 12 times the risk, that's very encouraging. So I want to remind myself that, hey, we're doing really great with this plan. Don't worry about the win rate only being 42%. We know break-even's 33%, but still that sounds like a low number. So it's good to give yourself these little psychological reminders that what you're doing is working and to just keep doing it. Don't break your plan. That's key. All right, so a lot of this stuff is old. It will always be possible. There will be no trades to take. That happened a lot this past week. So that's a good one to remind you of. Everything else, I believe, here is pretty old, except for this might be new. Only look at stocks on the first page of the mid-cap screen organized by volume. That's old, but this, favor volume over percent change. That's what I was talking about earlier. but look for stocks with 2% or more percent change. So sometimes you open the screener and it's all red and there's just 1 or 2 green stocks, but they're barely green. They're up 0.5% or something like that. That could just be a little bounce before they go back down. So I want to see 2% or more on the percent change. And I believe that's pretty much everything. I'm just going to scroll through this and you can check it out for yourself if you haven't already and see all of the details. You can pause the video and read through everything. This is my little graphic reminder of the setup that I'm looking for. Now let me show you the plan that I talked about in the beginning and show you just how little money that it takes to start doing something like this yourself and taking very little risk. So this is a very basic stripped down plan just to give you an idea of how you could start something like this yourself, taking on very little risk. How much money do you need in order to start real day trading? What does that mean, real day trading? It doesn't mean, we're trying to double our account in a month or even in a year. What it means is that you're focusing on collecting data and finding out whether what you're doing works or not, whether it's profitable or not YOLOing, not going all in on some hype stock or something like that. This is real day trading that if you want to get into day trading long term, you've got to start collecting data and testing to see what works and what doesn't. And you can't blow up your account in that process. Otherwise, you're not going to be able to collect any more data. So a great way to do that is with mid-cap stocks. That's the strategy that I've been trading since June 17th. Why mid-cap stocks? Because the mid-cap stocks have volatility, but a lot less than, say, a low-float small-cap stock. So that means that you're going to be able to take many more trades, collect a lot more data, figure out what works and what doesn't before you lose a lot of money. With a small-cap, low-float trading strategy, you could blow up your account in 10 trades very easily, maybe even less. So now we're going to also put in another criteria here that the price is $5 to $50. How did I come up with that? Well, on my screener, I have it set to $5 to $100. I'll show you that right now on my very own mid-cap screener. Here's my criteria, $5 to $100. But why did I reduce it to $50? 2 reasons. One is if you look at my spreadsheet here, you could see the cost. This will show you the share price of the stocks that I've traded. And if you look through trades number 1, 2, and 3, you're going to find very few stocks that are above $50. So it seems kind of meaningless to take trades on these stocks that are above $50, especially if you're just starting out, because you can get into this with a lot less money by capping it at $50. We're only going to enter on the 1-minute time frame. That's what I do in order to keep losses as small as possible. We set up our stop losses based on the previous candle on the 1-minute chart. So if we're trading on the 5-minute chart, that automatically is going to increase our risk if we make it the low of the previous 5-minute candle. Those candles take up a lot more price range than a 1-minute candle. Max 3 trades per day. That way we can cap our losses at minus 3R. No matter what, even worst case scenario, you've only lost 3R for the day and you can try again the next day. Max position size, $50 per trade because we're only trading up to a $50 stock. If you took a $50 trade on a $50 stock, you would only be trading with 1 share, but that's all part of the equalizing the risk on every single trade. You're going to set, if you try this out, you're going to set your buy widget up to buy $50. Let me show you that very quickly here. Let's just go to the single chart view, or you could do this from the stocks view. It's going to look basically the same way. So if we're trading here and we want to buy based off of our price, the amount of money on our account, we could set it to $50. That way we're going to take the same amount of risk on every single trade. We're going to throw $50 at the trade, no matter if the price is $5 or up to $50. So if it's $5, you're going to get 10 shares. If it's $50, you'll just get 1 share. All right, so, but the price of the stock is going to move based on the price that it's trading at right now. What I mean by that is a $5 stock may be able to move up 10 cents or something like that, where a $50 stock may be able to move up $1. So that's how the risk becomes kind of equalized per trade. The max cost per day is $150 because if you're taking up to a $50 trade and a max limit of 3 trades per day, you're not going to go over $150. So here is the big answer to the question at the beginning of the video. How much money does it take to start trading something like this? With a cash account, which has a T-2 settlement time, that means that it takes 2 days for your cash to settle once you've been in and out of a trade. The absolute minimum needed to trade this is $300. But if you want to give yourself a little cushion, which you should, $350 to $400 is really ideal. You could lose. The reason why you want that cushion is you could lose up to 8 or 10 trades in a row. A great example of that is even if something has a 50% probability, which is a coin toss, you start flipping a coin right now, you're going to see that you don't alternate between heads and tails on every single coin toss. Sometimes you might have 4, 5, 6 heads or tails in a row. So that shows you that even though you have a 50% probability, you're going to have some losing streaks there. And here, most losses will be 1% or less of your total account. That's just based on the volatility of mid-cap stocks. That's what I'm seeing after all of these trades. And after 10 losses, your account could be down as much as $30 to $50. That's why you need that cushion. But the beauty of if you have that cushion, you don't need to adjust anything in your plan. You don't need to change anything about the way you're trading. All you have to do is wait for the law of large numbers to kick in. That is the same thing that affects the coin toss results. We all know that a coin toss has 50% probability of being heads or tails, but you're not going to see that number until you toss the coin a whole bunch of times, like 100 times. The closer you get to 100 coin tosses, the closer your results will be 50% of the time it comes up heads and comes up tails. So I think I pretty much went over everything I possibly could in this video. Hopefully it was helpful to you. If you have any questions, let me know in the comment section below. Hit the like button. If you haven't subscribed, please do so. And as always, go into every single trade with a plan. Stick to that plan no matter what. Honor your profit target, take your stop losses, and in the long run, you should be green. Take care.